Hello, everyone, and welcome to the Your Mark on the World show. I'm your host, Devin Thorpe, and we're producing this episode for GoodCrowd.info. Our guest today is Todd Crosland, the CEO and founder of Seed Equity Ventures, our sponsor. Todd, welcome back.
Devin, thank you. Glad to be here.
We're thrilled to have you, and I just have so much admiration and respect for you as an entrepreneur and an investor. I'm excited to talk about your insights. You recently shared a blog post on your own blog about the 5 attributes of a good startup founder. And I thought it would be just great to go through and visit with you about those insights, because I do look up to your insights, your wisdom, your take on this as one who is both a successful, proven entrepreneur and an investor in entrepreneurs. So you really have kind of a double insight into this, and so you're particularly valuable. On your list, your first item was passion. Why is that so important, do you think?
Well, it's I think I talked about this before with you. One of these areas that as you talk to a founder, they have to have passion, and then they have to be, personally invested in this. I like to call it, they had to have crossed the Rubicon, meaning they had to, take this leap of faith, quit their job or whatever they were doing and come into this, their startup with both feet, and then have passion for it. And then, if they don't have passion for it, or say, I'm working at Fidelity Investments, and if you'll give us $500,000, I'll quit my job. That's not the type of company or founder we're looking for. But somebody that's so excited about their project, and they think that they've found a niche that they can capitalize on and just disrupt a given segment of an industry. That becomes, and then also that passion, it becomes infectious for investors, and then for those early employees, and then for sharing the business to grow the business long term. So I think it can't be overstated how important that is, as maybe one of the key elements that we look at.
Yeah. So Todd, in your experience, it sounds like one of the key measures of that passion is whether someone has crossed the Rubicon, whether or not they have left their past life and moved full-time into the new one. Am I understanding correctly?
Yeah, exactly. So if they haven't, made that leap of faith on their own and invested their own, time and maybe their own capital as well, it's hard for me to think of how investors are going to either believe in them or want to support them if they haven't taken that leap of faith first. Yeah. And so, and that the companies that we typically look at, they have a team already assembled, and a group that's committed about what they're doing, and they think that they've developed technology or found a niche that they can create a profitable business with.
Yeah. Your second point is that experience is important. Why is experience so important when we see so many young entrepreneurs seem to succeed? Mark Zuckerberg had no experience. Why is experience so important to you?
Well, I think he had some unique experience, and so we love to see companies. So we've invested in companies to date. Of the 8 companies, they were called this, a lot of them were serial entrepreneurs. Maybe there were a couple that were first time entrepreneurs, but their skill set with previous employment had proved that they had the ability to go out and do this on their own. And so I think that this experience, and as we vet companies and we do background checks on individuals, and it's definitely like a significant job interview that we do for this. And then, as we do background checks and follow up on references, and, we learn, are they honest? Were they hardworking? And then if they've had a previous venture, how do they treat investors? So we think all those attributes are important to look at. If it's a first-time entrepreneur, we'll definitely look at that. But we like to see some type of experience from their employment or education that leads us to believe that it's worth taking investment in their new company.
Yeah. Now, your third point is adaptability, and I'm really interested in your take on this.
Well, I think sometimes, and I've seen this in my own career, where I thought I was headed with an investment or a given venture, new opportunities or roadblocks came. And so adaptability, I think you have to be, because sometimes you have in your mind when you start a business and there's one or two of you or three of you, you have in your mind, this is the greatest company or product since sliced bread. And really, I think as you are in the preliminary stages of the business and the beta stages, I think adaptability means being in touch with your customers and the beta users and really taking their feedback to heart, and not just being so single-minded and focused on what you thought you were going to do, that you need to listen to what the marketplace is telling you as well. So I think adapting to real world experiences that customers are having, and then really providing what the customers want versus maybe what the initial thought was for the team.
Yeah. Now, the fourth point is persistence. And it seems like persistence is almost in some ways can contradict adaptability. How do you look for the right kind of persistence to match that adaptability?
Well, I think for most of these companies, there are overnight successes that we see and that you've seen in the world, but business and starting anything new, it takes longer and it's more expensive than you were planning. And so if you have somebody that has persistence, and as you review and do your due diligence on the company and on the founders, somebody that has persistence to follow something. There's people that in life that you meet that if they see a roadblock, well, they'll quit that job, and then 6 months later that didn't turn out the way that they liked it. Then 6 months later there's something else. So we like to see somebody that has consistency in their careers to find something and stick with it and see it through.
Yeah. There seems like a little bit of tension, though, between the adaptability to be able to pivot, to adjust, to tweak, and the persistence and perseverance to stay with it long enough to see if it's going to work. And it seems like there's just a little bit of tension because they're almost a yin and yang.
Well, I think of a mountain stream, as it maybe started as a spring in the mountains for the first time. Maybe it thought it was going to be heading a certain direction, and then it got pulled one direction and went over boulders and became a waterfall. And I think that's similar to somebody's career or the life cycle of a company. But the one thing about it, that stream always moved forward. So. And it maybe didn't go in the exact course that you were thinking, but it turned out to be something that was a great part of nature. So
yeah. Great point. Your fifth and final point is communication, and I can begin to appreciate why an investor especially would want good communication. But how do you think about that?
So I think that this is for a new founder of a company. So we're investing in the seed and the seed plus stage of their company's life cycle, and it's really like a courtship. Because if they raise, $500,000 or $1 million in their seed or seed plus round, what every entrepreneur wants to do is to do their Series A round at a higher valuation and raise more money, and then they want to continue to grow and be successful and do a Series B round. So you can't just take your check and walk away from your investors. This is a courtship, because these same investors that helped you in your seed round, they can help you in your Series A round, or introduce you to other venture firms that can help you in those later rounds. So I think it's so important how you treat your investors. One, it's almost sacred money. You can't waste it, and it's a precious commodity. But at the same time, as you look at growing the business and having good customer experience, with your product or service, you need to really focus on having the same experience with your investors. And we've got several examples of founders that we've backed, and some are very, very good at monthly updates for investors, and some aren't as good. And so the ones that are timely and it's an unvarnished update on their progress or lack thereof, I appreciate that, and I think all investors would as well.
Yeah. Well, if you think about your experience in identifying, investing in, partnering with, over your career with startup founders, I want you to think back to maybe your worst experience, and then help us think about what went wrong. What in your vetting process or in the partnership, what led to the breakdown in the deal there, that the founder wasn't the right person after all, or a good CEO?
Well, I think there was one instance in my career where I think I was more enamored with maybe the personality of two individuals. This wasn't something that came through our fund, but was a personal investment that they had such a toxic relationship that I wasn't able to catch before we made an investment. That had I known that and really spent more time with them and more due diligence, I could have found that out. So I think, especially if there's two founders, making sure that there's mutual respect and a willingness to maybe not worry about who gets the recognition, but a team approach to making the enterprise successful. So I think that's one that jumps out at me. So
yeah, as you think about management choices, founder choices you've invested in and backed over the last few years, what's a big win for you? And what do you think were some of the hints what were some of the indications that you had that they had some of these 5 key criteria?
Well, one is a company, it was DemoChimp, and now it's rebranded to Consensus. Garen Hess, the founder, so a serial entrepreneur, successful exit with the previous company. And so kind of all the, if you're doing due diligence, you just start checking off all these boxes, but then you go from there, then you look at, what a great operator he is, and how he's been kind of a model communicator with investors. And then, he's since gone on to raise, I think, something over $6 million in the Series A since we invested with him. So that's one of probably the favorite companies in our portfolio, I think.
Most people aren't self-aware enough to self-assess on these 5 criteria very well. If you ask a typical person, are you below average, average, or above average on these 5 criteria, most people, I think all the data of any kind of survey like this, most people would give themselves mostly above average marks on the 5 criteria. In fact, we all can't be above average. What tip would you give a founder to help him or her be more self-aware, more introspective to identify and really define whether or not you have the criteria, have these characteristics of a great founder?
No, I think surrounding yourself with, advisors, board members, even employees that are willing to, share their opinion with you, whether it's good or bad. I think you, as a founder, you have to be able to listen to, what other people, employees or advisors have to say, or mentors. And I think you have to be open to, have an open mind as you, are given, constructive criticism or suggestions, and not be just so single-minded that you're not willing to, listen to anybody else.
Yeah. Well, that's great insight, and I appreciate you taking the time and sharing those insights with us today, Todd. Before you go, please remind us how people can connect with you personally and how they can learn more about Seed Equity.
Sure. So Seed Equity Ventures, it's seedequity.com is the URL, and then at Todd Crosland is my Twitter handle that you can follow as well.
Fantastic. Well, Todd, we're grateful that you would take the time to be with us today, and we wish you every success in identifying and investing in more great founders.
Great. Devin, thank you.
All righty. Let's do some good.